for the market. And Boral reporting half-yearly net profit up 12% at $173 million. So we've seen a couple of these reports through Cochlear with their net profits falling about 1%, $111 million. Sales revenue, though, was up 6%. They say that they've maintained their FY18 net profit guidance of between $240 and $250 million. Their first half result has included the Nuclear 7 launch costs and one-off tax expenses. Also hearing from Transurban, they have come through with a tripling of their profit, more than tripling actually, $338 million. First half EBITDA, a rise of 11% on year to $850 million. First half proportional EBITDA up 12% on year to $911 million. And they've reaffirmed their FY18 distribution guidance of 56 cents per security. So that's for Transurban. We've also heard out from Boral this morning. They're expecting growth to continue across their North American unit. Significantly higher EBITDA is expected in FY18. Their net profit rose 13%. This is for Boral, $173 million. Expecting continued growth, in fact, across all of their businesses in FY18. An interim dividend of 12.5 cents per share for Boral. Another one, of course, we've been seeing this morning has been Challenger. Their result out. So I might just bring up those numbers again. We might actually bring in James Gerrish, who joins us live from Shaw and Partners, to get us across all of these numbers this morning. James, great to have you with us this morning, and thank you so much. And look, there's certainly a lot to get through once again. Maybe we can just start with Challenger, because it came out a little early. I'm hoping that you might have had a chance to kind of get across some of those numbers. They're expecting to maintain their dividend payout ratio, I note. What did you make of some of those numbers? What was it? Half year net profit, $195.4 million. What was your take?
Yeah, I think that was a statutory profit. So the underlying net profit was 208 million. The market was looking for 210. So yeah, a 1% miss in terms of that. The dividend was in line. The rest of the metrics looked really strong in terms of Challenger. Funds under management was 76.5 billion, which is massive, about 18% up on the PCP. Revenue was good at 1.13 billion, up 20-odd%. PCP cost to income was lower at around 32%. So that's all good in terms of Challenger. In terms of their guidance, which I think the market is going to be really focused on, they guided for 545 to 565 million. Just to give you an idea, consensus is already sitting at 564 million. So the consensus is at the upper end of that guided range. So they have guided into that, but that might be a slight disappointment, Leanne, in the context of Challenger.
Mm-hmm. James, Mark Todd here from the NAB. Is Challenger an equity that you follow as a business? Because it seems to be such an outstanding, over the last 10 years, they have been an incredible business and tapped into a vein of, if you like, investors and customers that, it's quite unique to the investment climate. I mean, most people are looking for that certainty. The advertisements all work. They seem to have won a lot of hearts and minds. Is that a company that Shaw tends to follow because of that type of mix that it's got in terms of investors and growth?
Yeah, it is, and Mark, you made a good point there. The last week's volatility will play into Challenger's future advertisements, no doubt. Across our book, the book that we manage, we've sold out of Challenger in recent times, so we don't have it on our portfolios now. It is a company I do watch pretty closely. It was, if you rewind the tape about 12 months or so, 12, 18 months or longer, Challenger was a business that wasn't understood by the market. They're, the way they hold and hold assets underpinning their future liabilities was obviously a little bit of a grey art in terms of the market's view around that. They've improved their communications to the market. They've been massive in growing FUM. They've obviously got onto a large number of platforms. They're growing over in Japan. So look, it's a massive growth company, and the market's understanding of the way they underpin their future liabilities has improved. So my only concern around Challenger is, the more they grow, the more capital they need to hold. So that is a slight impediment to growth. But again, it's gone from a multiple of sort of 12, 13. It's now on a really lofty multiple with a lot of positivity baked into the cake. And that's why I'm just saying around consensus, if the market's already sitting at 564 and they've guided 545 to 565, then that might be a slight disappointment because there's a lot of positive news baked into the cake there, Mark.
Mm-hmm. Right.
Can we talk Transurban? Because, look, there's obviously been a lot of focus on these bond proxies like Transurban and Sydney Airport, and whether rising interest rates perhaps might, start to have an impact. But certainly looks like a great result that's come through for Transurban. Their first time net profit more than tripling, $338 million. EBITDA's up 11%. Their proportional EBITDA up 12%. And they've reaffirmed their FY18 distribution guidance of about 56 cents per share. How do you view that, and how do you view Transurban overall as a bond proxy?
Yeah, I'm in the camp of not wanting to hold Transurban at this point in time, just given the backdrop of rising global bond yields that we've seen play out over the last 6 months or so. So in that context, I'm avoiding Transurban for now. That said, these guys have got a really strong track record and are likely to continue to grow earnings in the future. So over the last 3 years, they've managed to grow their dividend at an annual rate or annual clip of 12%. The market's positioning for 10% dividend growth going forward. That's going to be key. So I think you made mention of 56 cents per share guidance for the full year. Consensus is sitting at 29 cents for the half. So that implies they're guiding to 28 versus 29 where the market's anticipated. So I'm not sure whether the market will take that favourably or not, Leanne. I would have thought that's a slight miss.
Okay. Boral and Cochlear, another couple that are out this morning. I'm not sure if you've had a chance to look across some of those numbers, James.
Yeah, I think Cochlear, I think you made mention of they came in at 111
yes.
On NPAT. I think
slight fall of about 1%, yeah.
Yeah, the market was sitting at 120 million, but they did take the hit of the N7 costs into that result. So there'll be a few. I don't think that looking at will be taken too negatively, given they have brought those costs. For dividend of $1.40 they delivered. I think that was smack on expectations. The market was a little bit more downbeat around Cochlear's sales growth leading into this result, so it wasn't positioned hugely bullishly going into this result, if that's a word, Leanne. But I think that result will be okay in terms of Cochlear. Okay,
and they've maintained their net profit guidance as well, and that's obviously crucial as well to a lot of these reports.
Yeah, it is key, particularly the companies that are priced so
yes.
aggressively like Cochlear is.
Yeah, exactly right. Look, James, we'll start to wrap it up there, but I'd love to just get a thought on the broader session today. Obviously, the recovery underway on Wall Street. A fairly disappointing day yesterday, you'd have to say. We really didn't manage to participate in some of those gains from Wall Street on Friday and some of those gains around the region. The banks certainly held us back yesterday. How do you think we might track today? Do you think we'll be able to kind of regain some of that momentum?
Yeah, it's hard for our market to go up without the banks, Leanne. You say disappointing result day yesterday, but it did. The market did bid up pretty strongly off those early morning lows. It was largely on the back of strong buying in the resource plays. So, I think that theme will continue today. I don't think the reflation trade is dead. We've seen numbers out overnight around what the US is likely to spend over the coming years. The issue, obviously, that creates budgetary issues, but they are, providing stimulus to their system still, even though their economy is chugging along pretty nicely. So I think that's supportive of the resource trade, and I think that was borne out in yesterday's move, and I think that'll be the case today again.
Fantastic. Look, James, we'll leave it there. Really appreciate you joining us this morning, though. Thank you so much.
Thanks, guys.
That was James Gerrish joining us there live from Shaw and Partners with a take on all of those results out this morning. Now, also watching the Aussie dollar.